I suppose I think it's been mentioned already this morning that notwithstanding that maybe it's a relatively slow growth environment, and there's been some shifting within Europe, certainly even if Germany has had a little bit slower growth recently, in terms of investors within Europe and also coming outside of Europe, the sort of rankings haven't shifted. So certainly I'd probably argue still, and if Ignace will forgive me, that the UK market still remains probably the most sort of sought after national market, as it were, certainly for international investors. But Germany is clearly number two and has moved significantly ahead of France, I would say, in terms of that positioning, whereas it was more of a level playing field perhaps 12 to 18 months ago, and the sort of the relative economic weakness in the French market is playing that out. But having said that, the continued massive risk aversion amongst core focused investors is such that in all of those three main markets, you're still going to see very, very significant demand for core stock. And that's linked in, I suppose, to the fact that even if there's a lower growth environment and that may hold back rental growth in the short term, that's what's explaining the yields that we see today that are not necessarily the lowest we've ever seen, but they are on the lower end of the average range over the long term. So even though you've got relatively low yields and limited rental growth, total return expectations have come down, risk aversion is high. So amongst the clients for whom we're working, both European and international, Germany is still a very strong pick indeed, and I think that will continue.